We've had asset prices on the incline, and we've reached a tipping point in the last, say, 12 months where we now have interest rates going up in the fastest rate in history. That has never happened like this before. And so when rates go up this fast, it has to have a knock-on effect to the value of properties, because one is a function of the other. But if you have really high interest rates, then it's a forcing function on your decision making to determine, hey, do I really want to pay that much for a property when it's going to cost me at 10% per annum? I've got to basically repay the entire purchase price every 7 years in interest. That's a very, very costly price to pay. So what is going to be the return that I'm going to get on this? So in my mind, I'm looking at this thinking, well, very plainly, short term, one of two things needs to happen. Either we need to see a dramatic drop in property prices to adjust for the increased cost of capital, so we can return to basically a fair premium, a rental yield, or we need to have interest rates drop dramatically in Australia. And I can tell you that's not likely to happen, because historically speaking, Australia's interest rates typically range between the US and New Zealand. There is something severely wrong with this picture. And so I look at the Australian property market and I think, yes, property has historically always gone up, and I think it's probably a combination of both. But also, people conveniently forget that between 1930 and 1950, property did not go up. In fact, it actually dropped dramatically, and it took 20 years to get back to 1930 levels. So are we living in one of those times?